Hey guys, good evening. It's Dave Santarelli here from Santarelli School of Options and Options Trading College. So first off, guys, I wanted to take this class tonight. I want to make this a very important class, okay? Because I've seen a few things in the trade room. We've had a massive month or 2 months here as the market pulled back, and we're getting that climb. And I want to reiterate three things here that are going to help you guys tremendously over the next few months here. And it's something that you should be watching and instilling in your mind every week. Do a refresher on some of these videos. First off, here, guys, I want to go over this video here. First off, I have these posted in the trade room here. You guys could have access to this anytime you want to see them. These are past videos I've created. So this one here is options and position sizing. It's basically the difference between trading shares and trading options and how you want to position size your account there with options compared to shares. And that's a really good video there. Each of these videos are about 40 minutes to an hour long. This is a great class right here that I've done in the past on covered calls. It's in detail. It's about an hour long. Great strategy there as we're going to be going over the core weave tonight. Right here, vertical call spreads, great video I've done in the past on call spreads, how to identify them, when's a good opportunity to trade them, um, what types of strikes you should be looking for and whatnot there. So that's a great video on vertical call spreads. How to manage risk when trading options. This is really great here. It goes in a lot about hedging and managing your risk with proper position sizing. This one's a great video. I haven't seen many people struggling with this yet. In the past they have, but choosing the right strike price, expiration date, and where you want to enter into that trade. And a lot of that goes with the trade plan, finding your support and resistance areas. Great video right there. This is a little advanced class here on how to hedge your portfolio. This is when you have a larger portfolio, you want to hedge and still hold on to your positions, but profit to the downside there, like we did back in February, March, April when we pulled back. And we took advantage of that and made some very nice profits to the downside. And then here is the golden goose right here, the master trade plan. This is the best trade plan video I've made. It's the most detailed. It's the best. It's better than the one that's in the Discord under the where is it here? Under the educational videos. So if you go to educational videos, I have some here. This one here is option strategies, trade plan, position sizing. It's like all of them combined in one, to try to shorten all these other videos. But here are like the top 6 videos here, 7 videos that you should be watching. It's the details of each of those topics there. So when you get a chance, go over those, watch those. It's very important. All right. Now, first off, tonight's class, I wanted to talk to you guys about 3 key points here. Number one is going to be the trade plan. And in that trade plan, we're going to be going over our signals for our entries. We're going to be going over our strikes and expirations. And we're also going to be going over our targets and our stops on new bomb and BDM cycles. Second key point we're going to be talking about is trade timeframes. Maddie was asking about trade timeframes there. So we're going to be going over the timeframes and charts of swing trades versus day trades and scalps. Okay, and then we're going to end the class tonight with going over some chart setups and trade ideas that I think are going to do pretty well over the next few months here. So those are the 3 key points I want to cover tonight: trade plan, trade timelines, time frames, and chart setups and trade ideas. All right. So first off, guys, I want to discuss something in the trade room. Let me see. Let me go back up here. First off, while I'm looking for that here in the trade room, yeah, here it is right here. Not sure where it was, but it was someone that was it was someone that was playing Tesla, trading coin heavily, and Nvidia. Meta, Nvidia, Tesla, coin. and they're making all those trades in the 1 week there. So I want to go over this. Okay. So first off, guys, let's go over this. Look at what we've done. Look at what we've done here for the past month. We're up $18,059. This is in Robinhood. This is the past month, right? We're up $18,059.87. I want you guys to pay attention to this because what I'm going to tell you is very important. All right, look at these trades. These are all, today. You can see today we closed out of the NVO trade. I don't have Moderna on here, but we also had a trade on Moderna based on a catalyst there that it got FDA approval for the booster shot, and shares soared 12% at the highs. So we made about $1,400 on that trade today. But this screenshot I took in the morning, right when I closed out of NVO, look at the gains that we were having. NVO 47.83%. We made $1,155 on NVO, right? Look at the expiration, 6/2, a month out, over a month out till Expo. UNH, that stock had a large pullback, right? We found a nice buying opportunity. There was recent catalysts, there was upgrades, there was price target changes, and we got into that trade. We got into two of them on Robinhood. And look at what those trades made. 89.48%, $1,700 profit, and $1,250 profit on this other vertical spread on UNH. Now, CoreWeave, this was a trade that we did a covered call strategy on, right? A covered call strategy is just buying shares and then selling someone the right to your shares at a higher price. For doing that, you're going to collect the premium. And we collected about a $1,200 premium for selling the 67.50 strike call. And then we also had share appreciation from the $60.90 that we bought it at up to 67.50. So we made that share appreciation. Plus, we collected the money the other day there from selling that covered call. And look at that gain there, $4,476.40. Here was another UNH trade. This was just a regular call. Man, do I wish I held on to that one a little bit longer, but I sold that on May 16th. But as you can see, we closed that out for almost a 25% gain and another $1,030 profit. All right, now this is what I want to teach you guys tonight that's going to help you stabilize your account and not see those crazy pullbacks, giving back the profits that you've made. This class tonight is going to help you with that. Okay, so I want to make that very clear. Please pay attention. Now look at what all these trades here have in common. What do they all have in common? Does anyone know? Because I want you guys to be able to identify good breakout opportunities when you see the opportunity. UNH had a large, massive pullback, right? We take a look at UNH. Look at the pullback on UNH. When we saw the spinning top right here, a spinning top is usually a sign of a reversal. Not only that, on this day, we started getting upgrades, initiations, and price target changes to $400 back up to $500 on UNH, which gives it plenty of room to climb. Okay. Number two, UNH. It pays a nice dividend. It's paying a 2.9% dividend annually. Here it is right here. Per share, it's paying $2.10 per share. Okay, so investors are going to be coming in, and especially institutional investors coming in and buying that dip. We saw that opportunity. We capitalized on it. Not only did we capitalize on it on Robinhood, but we also capitalized on it in our E-Trade account and then on Schwab as well. Schwab is long-term shares, and then E-Trade active trading account, Robinhood active trading account. So here is E-Trade, right? Here's month to date on E-Trade, $8,416.44 month to date, right? Look at the trades that made us money and look at the trades that lost. UNH. I want you to be able to identify these setups. UNH, large pullback, had upgrades, catalysts that drove it higher. CoreWeave, it had earnings coming up. NVIDIA was a big partner in CoreWeave. The stock took off. I wish I held on to that. I sold that 67.50 covered call on there. If I didn't do that, I would have had an extra about $20,000 in profits. But I made about $5,000 on that trade with the selling the covered call and the share appreciation. TSLL with Tesla. This is a 2 times leveraged ETF right there on Tesla. So we've made some nice profits there. JEPQ is just our beauty. I've been holding on to JEPQ, adding on that dip there. Okay, so another $8,416 profit there. And then Schwab has large profits as well, and that's one just shares. It's not options. All right, so now what do they all have in common? I didn't see anyone comment in the Zoom chat there. What do they all had in common? No one wants to take a stab at it, huh? All of them had a large pullback and then had a catalyst that were pushing them higher. UNH, obviously, it got destroyed after the CEO there got killed in New York there. I got to watch what I say, otherwise YouTube will ban it. But otherwise, she pulled back from $610 all the way down to $250. I mean, that was an incredible pullback there. Once we started seeing those upgrades come in, those price target changes, and them giving it outperform ratings. Look, we'll take a look at it. UNH. This is Sunday. Let's go back to last week. Here you go. Back to May 14th last week when we started buying it. Look at all the price target changes. Overweight rating, outperform rating with a $356 price target. KeyBank maintains overweight on United Health. Lowers the price target to $450. Bank of America Securities downgrades United Health to neutral. Lowers price target to $350. The stock then was at $250. Morgan Stanley maintains overweight on United Health, lowers price target to 374. Wells Fargo, overweight, 351. Oppenheimer, outperform, price target 400. Deutsche Bank, buy rating, lowers price target to 362. JP Morgan, overweight, price target 405. Barclays, overweight, price target 362. Okay, so that's really important to understand that. She had a large pullback, and then we started seeing buyers stepping in. We took advantage of that catalyst there and all those upgrades and price target changes, and we saw the volume starting to come in. You see all these candles back here? They were smaller candles. They were pulling back, holding below that yellow 10-day simple moving average. But we had that catalyst. We had that volume start to come in, and we started gapping higher. We took advantage of that and we made a killing on United Health. We destroyed that with options and with shares. I still think we have a lot of room to go there. So I'm going to be making another trade on UNH tomorrow. And I'm probably either going to be picking up some shares. I was thinking about picking up maybe between 500 and 700 shares, or I might be picking up a longer term call on that, maybe like out to October, November expiration and target that $400 per share. I would like to pick up some shares though, because it pays a very attractive dividend. And I still feel she has about 15 to 20% upside to go for the rest of this year. So coupled with the dividend and the share appreciation, I feel like we could get well over a 20% return, possibly even much higher, like a 30 to 40% return on UNH by the end of the year. Okay, so that's important there about UNH. That's why we had such a big trade on UNH and made all that money. CoreWeave, we had the covered call strategy. Like I said, I wish I sold a further out, or I wish I got a regular call, but I made that 5,000 some dollar profit on that, and I was happy with that. That was all within a week. And you see there too, like I was showing you guys before, there's a reason why we always see nice profits here, right? You can see how we did. Where the heck did I put that for the week? Let me get that back up. So there's E-Trade, and then here was Robinhood. So you can see all these trades that we were getting, they were all coming off lows or they had a catalyst. CoreWeave, it had the partnership with NVIDIA, and it just had its IPO. I actually got in at the IPO at $40 per share. Great trade right there on CoreWeave. And now let's take a look at NVO. NVO, they fired their CEO. The stock, I mean, this is a weight loss drug. It's competing with Eli Lilly. The company recently just fired their CEO for not keeping up with Eli Lilly in the weight loss drug market there. You know, obviously, they have their Wegovy, Ozempic. Um, Eli Lilly's got their tirzepatide. Nice setup on NVO, and I still feel like this is a great setup to jump into. They have $90 to $100 price targets on this. They have a new CEO, new management coming in, and the whole reason why they brought the new CEO in is to make sure that Novo Nordisk is competitive with Eli Lilly. So you better believe that that new CEO has a lot of pressure on him to sell their products and to compete more effectively with Eli Lilly. So after they announced the new CEO change, we're starting to see NVO take off. We already made one great trade on it. We have another trade open, and I'm going to be looking to make some more trades on that going forward. So make sure you guys keep an eye on NVO. Great setup right there, and looks like she's going to continue to climb. So keep an eye on NVO. This is a great setup. We just made our first few trades on this. This one definitely has room to run, and we're going to be looking for some more trades on that later this week. All right, now, but getting back to where we wanted to talk about, you could see a lot of people in the trade room, you know, they were over trading today. They were over trading today. They were over trading yesterday, right? Now let's go over our trade plan here. This is what's so very important about our trade plan. Number one, as you can see, we have the breakout momentum cycle that started. We had the moving average convergence divergence crossover right here. We started trading above the zero line on the histogram of the MACD. And then as you can see, we had the 1020 crossover and we had that breakout. Now, knowing our trade plan, I was able to sell our trades way back in January and February back here when we were consolidating and we were starting to see some signs of tariffs coming in. Trump was coming in office. They were talking about tariffs there. I said, you know what? We had some massive gains after that large run that we had over the past few months on JEPQ and all of our other shares. So I locked in our shares. And then when we had that 1020 cross below and the MACD cross below, and we started trading below zero line on this gram of the MACD there, that's when I started buying puts. I started buying puts literally right on that day right there. Right there is when I started buying puts. I saw that larger volume coming in. That's usually a sign of institutional investors unloading some of their shares. I saw that. We identified that. We were out of all of our shares, and we started trading puts to the downside. We capitalized, and we made a lot of money. First off, we made a lot of money by locking in our profits near all-time highs. Secondly, we saw that BDM cycle, and then we started profiting to the downside with our SPY puts and all the other types of puts we started trading. Number two, once we saw that 25% pullback in the markets there, we identified that as a correction, and we started buying shares. We bought some shares and we got those at the lows, especially JEPQ and all those other shares. It was great there. It's great that we bought those shares at lows after just selling them at highs. So that's what I mean about, you know, like some people just say, hey, you know what? There's just panic selling. You're better off holding on to your shares. Well, why the hell would you want to hold on to your shares for 3 months when the market's going to have a 25% pullback? Why not sell your shares back here, lock in profits near the highs, and then after she has that pullback, then buy back down here like we were? That's what you want to do with our trade plan. And that's what our trade plan is there to help you with. Sell near the highs, take advantage of the momentum to the downside, and then accumulate shares when you have that correction or that pullback. That's what you want to be identifying right there. So it was great that we were able to sell our JEPQ shares and everything back in February, January, February. And then we took advantage of puts to the downside. And then we started adding. I started adding JEPQ literally on this day right here. I thought we were going to break out a bit. I added a few shares of JEPQ, and then after that larger pullback on JEPQ, she came down to like $45, $46. I got my cost basis into like the 48 range, which is great. And then she had that breakout, and I ended up selling JEPQ, at least in the Robinhood account there. And then I started taking advantage of calls and stuff to the upside. Now, here's the thing. We have our breakout momentum cycle, right? We have our breakdown momentum cycle, but within those cycles, we also have something that's very important that all you guys have to identify and realize. Does anyone know what that is yet? Does anyone know what that is? Because that's going to tell you exactly why there's people in the trade room that you'll see them over trading on weeks like this and weeks like last week, and you'll see them over trading, and then they'll be wondering why they aren't getting the same results. Now, why is that? Anyone on Zoom there? Do you guys want to answer? Yeah, of course. Colin says there are down days. Yeah, of course there are down days, and I always said that markets just don't go to the moon. I wish. I mean, if markets just went to the moon every day, I think we'd all be Warren Buffett's, right? But stocks have selling pressure. Profits are taken. There's large hedge funds that have hundreds of millions of dollars worth of shares. Some have billions of worth of shares, depending on the company. But there's going to be different times where different institutions, different hedge funds, different portfolio managers sell positions, and it's all about supply and demand. So if you have a large dumping of shares, you're going to have that pullback. Okay, now, but here's the thing. Why yesterday and today did you see so many people in the trade room over trading and losing money? Why? Jessica says NTZ. That is absolutely 100% accurate. Yes. So that's why it's important for you guys to watch that trade plan video. Did you guys notice today how I did not go on the stream in the afternoon? I wasn't on the afternoon stream until the end of the day there, like to give my analysis at the end of the day, give my opinion on where we're heading, what we're looking like. But I didn't trade this afternoon. I locked in profits on NVO this morning. I made the great trade on Moderna that made us a great profit of about $1,400. And then I sat back the rest of the day. Why? 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 Well, look at this. I'm horrible at drawing straight lines here. But could you guys identify that? With our trade plan, when you have candle side by side, what does that signify? Consolidation. Great job, Jessica. Jasmine says consolidation. Great job. So what I want to know, why the hell are you trying to force trades during the no trade zone of the trade plan? You see me sitting back, right? I know everyone has emotions. Everyone gets fear of missing out, especially after the massive week we just had, right? I mean, look at that. Look at those profits. $18,000 in 1 month on off of my small Robinhood account. Robinhood account, it's like 35 grand. I freaking almost doubled my money there, and I took out money to buy a golf cart, to buy a massage chair, all these other crazy things. To do my patio, I bought $1,500 worth of freaking papaya trees, orange trees, clementine trees, and key lime trees. Why? I don't know. But I bought all those, right? This is the important thing I want to tell you guys about. I'm up big, and there's other members that are up big in the trade room, and you guys know who they are. You guys could identify them. The ones that always tend to give their profits, especially after a large week like we just had. I mean, look at this bomb cycle. I mean, that's why we're up as much as we are over the past month. We took advantage of that bomb cycle, right? That's why we're up 18,000 on Robinhood. That's why we're up. How much here on where the heck's my flipper at? That's why we're up $8,416 on E-Trade, right? That's why we're up $26,000 in our active trading account within the last 30 days and up over 60,000 in shares in the past 30 days. That is why right there we had the bomb cycle formation and we took advantage of it. Now here's where I'm trying to help you guys, especially those that are newer, especially those that struggle with emotions. Okay, what's important here is identifying the no trade zone. This is consolidation. The markets aren't doing much. They're waiting for that next news catalyst to have that next move. You have to wait until you break above this consolidation zone right here. Once you break above that, then we could eye up that $600. For right now, it's not breaking above that consolidation. It's side by side. How long could it stay there for? Well, look at this. When we had this last breakout, it had 2 days of a pullback, right? And then it took 3 days for it to get back up to that double top. So it had that kind of V. It held at that 10, and then it got that climb right there. That's important to identify. That right there took a week to happen. That's over 1 week. Okay, now this is going to be going into the next topic there when we talk about trade time frames, because this right here from high to pullback to breaking back up to where it was took over 1 week. That's why, in a second here, we're going to be talking about trade time frames. Everyone seems like they want to, that's the one thing you notice about me. I'm getting those July, August expirations. I'm seeing the people in the trade room doing these short weekly expirations, trying to capitalize on moves every single day. I mean, Warren Buffett doesn't even do that. Not even Warren Buffett can go into the market every day and do 10-day trade scalps and a couple of swing trades and come out ahead every single day. It's not going to happen. There's some days that the market's consolidating, it's flat, and you got to stay away. You got to sit on your hands. Okay. I'm telling you this. I'm being tough on you because I love you guys and I want to see everyone profit. Everyone in here, everyone in our group just had an incredible run over the past month, right? But where it's very easy to give back those profits is when you try to trade during the NTZ zone right here, when you're in side by side for the last 3 days. You can see here, you were climbing every single day, right? 5 days in a row you climbed. Those are the areas where you want to take advantage of short-term trades right there, like 1-2 weeks out early in the week. Right now, when you're trading side by side, you can't do anything, guys. You got to sit tight and you got to wait for that next move. Where's the market going to go? Is it going to go higher? Is it going to go lower and have a little pullback after that large run? I don't know. But what I do know is we have a trade plan that tells us exactly when we want to make a trade and when we want to exit out of our trade. Right now, SPY's and NTZ. Okay, if we go over to Qs, take a look at Qs. Qs are in NTZ for 1, 2, 3, 4, 5 days. NTZ on Qs and NASDAQ. So tech have just been in consolidation for 5 days here. That is a tight consolidation zone for 5 days. If you're trading tech, like I see people trying to trade in the trade room there, they got destroyed. Theta's eating away at those short-term options really quickly. You get something that expires this week and you're just seeing it go flat for a few days in a row, decay is going to eat away at your premium and you're going to lose money very quick, and especially if it has a red day. So you have to understand the time frame of each of those trades, right? So when you're in NTZ, it's very important for you guys to identify that. That's usually when I'll sit back. Sometimes I won't go in the afternoon stream because I know my emotions too get to me. I mean, I'm a trader. I'm also a human. I mean, everyone has those natural instincts of emotions and fear and whatnot. And especially when I'm teaching members and going over chart setups and trade ideas, like sometimes it makes me want to force a trade. So if I could identify when the markets are in that no trade zone and I want to sit back and not trade, that's exactly what I'm going to do because it's going to protect your money and prevent you from giving back all your profits. You could go back and scroll up in the trade room right now. And there's only a few, I mean, we have 360 members. There's like 3 or 4 of them in the trade room that you could see that gave back a lot of their profits over the past week or two. I want to help you guys stop that emotional trading. And you can stop that emotional trading by following the trade plan. There's a clear area where it says to sit back and not do anything until you get that breakout above resistance of that NTZ box, that little rectangular box right here. So this is resistance, this is support. So when you break out of resistance, that's the area you want to look and identify a possible swing trade, whether it's going to be a call, whether it's going to be a put. I don't know. I mean, I'm not. I don't read crystal balls. I can't tell what the future is. But what I can do is tell you we have a very successful trade plan that tells us exactly what to do. So when Qs, SPY, and Diamond, all three major indices, are in the no trade zone, what do you think you should be doing? What do you think you should be doing, Jasmine, Jessica, Chad, Maddie? When you're in the no trade zone, what do you want to do? Sitting on hands. Yes. Chad says sitting on hands. Jessica says sit back and wait. Because you know what? Do you know what, guys? There's nothing better. And I'm telling you this. And you're going to understand this the longer you start trading. Where did I put thing here? Here it is. Protecting this right here is the most valuable thing we could do as traders. Protecting our profits. Okay. Protecting profits is number one priority. If that means that I'm not going to trade, if I'm going to sit back for a day or two, maybe even 3 days, you bet your ass I'm going to sit back and not trade because I want to keep these profits for me. I don't want to give them back to the market. I don't want to be an emotional trader. And I certainly don't want to give back these profits I've worked so hard for, especially when the market's telling us we're in that no trade zone of our trade plan. So I want to protect those profits as much as I can. And that's what our trade plan is signifying right there with the no trade zone. Okay, so when you have that consolidation, sit back. We could look at the Diamond ETF. I didn't look at Diamond yet, so we'll be seeing that together here. I mean, that one's been consolidating for 3 days here. It had a little bit of consolidation. It had a run for 3 days. And then, yesterday, today, it's kind of failing to break through that 430 here. I mean, once she breaks through that 430, I think we have an easy run up to that 440, which I'd do some short-term swing trades, maybe like 2, 3 weeks out, maybe a month tops, and target 440. But like I said, when you're in consolidation on the daily chart, Diamond, Hughes, SPY, when you're in consolidation like that, sit back, protect your profits. Now, what you can do during the NTZ is you could day trade. Okay, now on a daily chart, so that's something Maddie wanted me to talk about, which is trade time frames. So let's talk about that now. That's a perfect little thing there, Q, to get into trade time frames. So our trade plan right now works for swing trades and it works for day trades. This is a daily chart of SPY. You can see on SPY that we're in the consolidation zone on the daily chart, right? Each one of these candles represents one day. And for the past 3 days here, we're in the NTZ. Means you're not trading right now. Okay, but now that's as far as swing trades go. So when you're looking for swing trades and leaps, you're looking at that daily chart. You see daily right here? So there's a daily chart. You could change that to a weekly. You could change that to a today, 1 minute, 3 minute, 5 minute chart. But a daily chart here is what you're looking for swing trades. And for swing trades right now, it's telling us to, hey, sit back, 3 days of NTZ. But if we want to take advantage and still trade while we're in the no trade zone on the daily chart, that's saying, hey, it's not the right time to make swing trades just yet. Well, we could go to the today 1 minute chart and we could identify if there's any areas to trade, throughout the day. Now, first off, when I see this, all I see is a big NTZ zone, from the morning here until about what time is that? 1400 hours. What's that? 2 p.m. So at 2 p.m., you notice how here was support for the day. And then you started dropping below it. and you were in that BDM cycle. There's a 10-20 crossover, and then you could kind of guide this too. I don't go over this much, but I always like doing that too. You could draw your support on your MACD, and you could see that it's been coming down right to support. So when the MACD dropped below support there, you know that was a good solid breakdown. So you saw that coming in right around 593. And when you saw that coming in, you could have traded that to the downside. She got down to about 588 there. So that's a 5 point pullback right there from those highs to the lows right there in that BDM cycle. And then you had a quick breakout. So you really only had about two good setups today to day trade. You definitely could have traded off the lows here of support. And this is called trading within the channel. If you guys watch one of those videos in the educational video section I have there, this is like the NTZ where you're channel or range bound, where you're getting down to support and up to resistance. So like when you come down to that support, you could trade it back up to resistance, take profits somewhere along the way. You don't have to trade it right up to the top of resistance. That's not what I want you to do, but sell it somewhere in the middle there. When you see it coming down to support and it holding for like the 20th time as it did during this whole pullback right there, and then it's starting to break out again, jump into a trade there, a day trade, a scalp, and take advantage of that quick little climb there. But the two strong breakdowns and breakouts happened at the end of the day there at 2 p.m. And then you had that bomb cycle start a little after 3 p.m. So those were the two main those were the two main trades that you could have made today. Right here, I mean, this is all NTZ. But it's within a channel, and it's a tight channel too. So 594 to like 592.50. So it's very tight. That's why you have to take profits very quick there. But for me, I wouldn't even trade any of that. And you guys saw I stayed away from all that today. It was just sideways action. I was telling you guys on the stream all day. I said, guys, we're trading sideways. I don't want to trade that. You saw the size of the candle. It was a doji, a small little doji there. And I didn't want to trade that today. It was indecision. It wasn't breaking above resistance. It wasn't breaking below support on the daily chart. So I didn't trade intraday today. Now I did trade Moderna. Why? Because we had a catalyst there. Right here. Do you guys remember when I got into Moderna here and I sold it literally at highs of the day? Do you guys remember that trade we made on the stream? Anyone? Were you guys with me when I made that trade? Colin says yes. He saw it. Anyone else? Jessica said yes. Well, I jumped in those shares at about 28 bucks a share, right? I forget how many I got, but I got about 35,000 or $40,000 worth of Moderna. I just picked up the regular shares. Chad said he was in it with me. Matthew said he was working, he missed it. But we had the FDA approval. So here's the important thing about, when you're in the NTZ zone, that's when the news wire becomes critical and you must listen to it. Because if you take a look here and you looked at mRNA, look at what caused that spike here. What time was that at? That was at about 11:10, right? Well, take a look. Guess what the hell happened at 11:10? FDA sets new COVID booster guidelines for approvals for healthy adults. US FDA advisors to consider new COVID shots should target LP81 subvariant. Shares of vaccine stocks are trading higher following a report indicating FDA advisors will consider if COVID-19 vaccines should target a subvariant for the 2025-2026 season. Okay, so that's what's important right there is that news came out. You can see it says BioNTech, Moderna, Novavax, and Pfizer. All right, look at how much they were up today. So we saw that news come out. We heard it on the news. We heard it from Charlie first before it even came out there. So we heard that, we jumped in, and we took advantage of that big spike. That is called a catalyst event there. We heard breaking news coming across the newswire, and that news was that the FDA approved the vaccine, the booster shot for healthy adults, and Moderna shares got that pop. I made $1,400 in about 4 minutes on that trade. That was a great trade you guys saw me make. That's the type of setups that you want to watch and listen for when you're trading in the no trade zone on SPY, Diamond, or Qs. Listen to the newswire. The newswire is going to give you stocks that you could make that trade on that are catalyst driven. Okay, that's what you want to be watching the newswire for. That's why I have the newswire live for you guys all day. Because that newswire is going to give you catalysts that could propel a stock higher or lower given the circumstances and the news that's breaking on that. So it's very important to listen to the newswire, especially when you're in the no trade zone on SPY, Diamond, and Qs, and you see that you have really no potential there for swing trades. That's when you want to start looking for either stocks that are still having momentum or B, stocks that are catalyst driven that's coming from the newswire. So that's what's important there. And that's how you're trading, Maddie, is with the time frames there. Now if we're going back to early bomb cycle and BDM cycle, when you first get that 1020 cross and that MACD cross, and you're going from that strong BDM cycle for a few months into that breakout momentum cycle, right here, when you get that MACD cross and the 1020 cross, that's when you want to jump into calls and get something at least a minimum of 3 to 6 months out till Expo. Why? It's because you're going to maximize your profits and look for that resistance that you were at before it started that BDM cycle. So right here, you could see SPY was just at about 613 during that BDM cycle, right? Now you were in BDM, you had that strong breakdown, and then you started that breakout. Well, when you started that breakout right here, you had the MACD crossover, the 1020 crossover, and you could have gotten something right here. So that was April 24th to April 28th, whatever it was you wanted to say you got into it at. You could get something 3 to 6 months out. So that means July monthly expo or October monthly expo. And you could be targeting at least back up towards that 613. That's what's important right here about SPY and understanding the true BDM cycle and breakout momentum cycle. When you start that BDM cycle, get something 3 to 6 months out. Target that support. So you can see when you started that BDM, you guys remember I told you we were going to come back down to 500? I mean, there's literally videos back when we were doing classes there. I was talking about that breakdown, and I said, "God, I mean, everyone thought I was crazy." I said, "Guys, we're going to come down to that 500. That 500 area is major support on SPY going back to April and May of 2024." And guess what? We did just that. And when I saw us come down to that level and hold it and then get that massive buying candle that came in, obviously Trump made a what do you call it there? Tweet saying now's a good time to buy, and then it freaking shot up 11% in one day. But like that was the event there saying, hey, things are getting better now. We're seeing that reversal, and the markets are getting that climb. So we came down to that 500, held that support there, got that climb, started that breakout momentum cycle, and continuing there to break out and make some new highs. Okay. So, guys, if you could please just wait until questions at the end, it'd be much easier. All right, so going back to SPY here, you can see up to that 600 is going to be that next resistance. I think we could easily capitalize on that, make some good money. It's just right now you're an NTZ on SPY. You got to wait until you break above that resistance and then target that new all-time high, which I think we're easily going to get to. It's only about another 20-point move. I think we'll easily see that by the end of July, especially with all the positive catalysts that we've been seeing in the market. So I like that. And like I said, we just went over our trade plan. We went over our targets, our stops. Our targets are going to be up to that resistance. Our stops are going to be, you can see right here where SPY is holding that yellow 10-day simple moving average, right? Well, if you have that trade back here where that you got 3 to 6 months out till expiration, your exit is going to be the first candle below that 10 or 20. Right now, SPY's holding that yellow 10. So I would use that 10-day simple moving average as my stop on a swing trade that you have 6 months out till expiration. You can see how you capitalize from about 538, 540, all the way up to almost $600. So right there, you got well over 10% move in the underlying equity there. And then with options, that's an easy 300% gain on a 3 to 6 month out expo. So right there, you're telling yourself that you want to hold on to this position until she gets a candle with body below that yellow 10-day simple moving average. So for example, your stop would look something like this. If you had a red candle that looked like this, and it was below that yellow 10. So if that yellow 10 continued and it was climbing, that right there would be your stop, is a candle with body below that yellow 10-day simple moving average. That's where you would have your stop. So great opportunity right there on SPY to continue that breakout and get back up to all-time highs around that 613. So that's what I wanted to share with you with the trade plan there and looking for those trade time frames. If you're day trading and scalping, you're looking at the today 1 minute chart. You could also change it from 1 minute to a 3 minute. That'll give you a little bit less of the confusion there and the NTZs. And then if you want to change it to a 5 minute, that's going to give you a much better picture there of that no trade zone. So you can see the no trade zone trading side by side, not doing much. Then you had that 10-20 crossover. You broke below that support and you had that larger pullback. And then you had a breakout there going into the end of the day. But for the whole day there, when I was watching people trade that, I'm like, why are you trading the markets when we're trading sideways and there's not much volume coming in? So that's what's important there, is identifying the no trade zone and knowing when to sit back. Every day is not a trade day. There's going to be some days that you could just sit back and wait for the markets to give you those solid trades. Yes, there's 10,000 stocks out there. You could bust your ass all day you want and look for those stocks that are breaking out. Me, I got my list of about 150 stocks that I like to watch and that I trade perfectly. I'm not going searching for those small cap, mid cap stocks that I know nothing about, or no news about them or anything like that. I have my about 150, 200 stocks that I watch, and I'm not searching every day to actively make a trade just for the hell of making a trade. I'm following my watch list. I'm following the markets. I'm following the newswire. I'm finding catalysts that are going to drive a stock in one direction over the other, and I'm taking advantage of it and capitalizing on it. And that's the importance of following through with that trade plan. Okay, is identifying those setups. Just like I know one person in here. Let me see. Is he in here still? No, he went there. But JB, if you're still listening, I remember JB. He got into SEG way back here, right? And it was trading sideways. He's like, shit, SEG's not doing much. He got rid of it, right? Look at that breakout then SEG had after he sold out of that trade. It was in the no trade zone. It wasn't doing too much. It had the MACD cross. It was trading above zero line on the scrim of the MACD. It just had to have time. So, when you identify something like that, wait for that 10-20 cross, wait for the MACD, wait for it to break through that resistance and trade it. It's a beautiful opportunity to trade SEG. I just brought that up because he was upset about that one. He was holding on to that one for a while it was in no trade zone, and then it finally broke out after he sold it, which seems to happen to all of us, right? But then you take a look at NVIDIA again. Now look at NVIDIA. This is one that people are trying to trade and force trade here. There's no opportunity right now. You got, 5 days of consolidation. This is one whole week that NVIDIA has just been in the NTZ zone, right? So when you see that NTZ, what does that mean, guys? That's our no trade zone. Wait until she gets a candle above or below for your next breakout. So you get a candle like that, you could trade it back up to highs, and have your targets up there. You get a drop below that, well, then you could be looking for it to come back down to support, which might be right around that 120, and look for it to come back down there. Or, with that breakout above resistance, you're looking for it to get up to your resistance, and here's your target. on a call, and then here would be your target on a put. So it's very easy to identify trade setups. You just got to be disciplined and sit on your hands and wait for it to either break above or below. It's very important, guys, because I do not want to see anyone giving back the profits that they worked so hard for. We're up big. It's only a couple of members, but that's my job, is to help all of our members and identify what they're doing wrong. And identifying when you're trading in the no trade zone is number one. That means you need to refresh the trade plan and you need to watch that again. Because if you're trading aggressively during the NTZ zone, it's not going to work out well for you. It's not going to work out well. So please understand that the no trade zone is there for a reason. Do not trade during that no trade zone. I don't care if I have to be your drill sergeant. If I see you, I don't care if members get a little upset if I call them out and say, hey, you're actively trading, you're over trading. That's my job. That's what you guys are paying for. I'm here to help teach you when to sit on your hands, when to wait for those right setups, when to, make those trades that are looking ready to break out there, or the ones that are pulling back and we want to get some puts on. But when we're trading sideways and there's not really anything going on in the markets as far as earnings or as far as catalyst for that week, you got to sit back, because theta is eating away at that option premium and it's decaying that premium. So every single day, theta is eating away at that option premium, and that option is becoming less expensive as it sits in that NTZ, the no trade zone. Okay, so that's important for you guys to understand and realize. Okay. So that's important for you guys to understand. Maddie, I think you go through way too much in your head. Really, I'm going to be totally honest with you. I think you're thinking about 1,000 different things and you're just like all over the place. You just got to focus on the trade plan and just look for your entries as far as your long-term account goes. Your long-term account, look for those new bomb cycles and new BDM cycles. Hang on to them until you're happy with those gains, until they reach your targets, and then exit out of them. That's the one other thing I don't do. I don't marry a stock. I don't marry a trade. If I'm in like Moderna today, right? I was in Moderna, out of it. I'm not looking back. I don't give a damn what Moderna does tomorrow. I'm in and out of it. I took advantage of that catalyst. I took advantage of that momentum that it had from that news that came out while we were on the stream together, and I capitalized from it. We heard the news about NVO getting a new CEO. We made 4 trades on that, and we capitalized on it. We heard the news about NVIDIA being a core investor into CoreWeave, and we capitalized on it. We heard about UNH pulling back and then having those major upgrades, price target changes, and we capitalized from it. We're waiting for events to capitalize on momentum. When you're in the no trade zone, sit back, sit on your hands, and wait for a breakout above resistance or below support. I do not want to see you guys giving your money back. We just made over $90,000 here in the past month. Do not give it back. It's very easy to give it back if you're over trading and trying to trade something that is not there. Wait for those setups, and you're going to continue to see your account reach new all-time highs. You guys know there's people in the trade room that do very well for a month or two, and then when the market goes blah, they overtrade and they give it all back and they blow their account. And then they come back 2 months later, refreshed with a new account, and then they do very well again because it's fresh on their mind. Those wounds are fresh, they still sting, and then they follow through with the trade plan and they do well for a month or two. And then after having a big month of $90,000 in profits, I mean, look at where is it here? Roman. Where the hell was that in there? Let me see where it is here. But Roman, you guys remember Roman? I mean, he's doing incredibly well. He had about $110,000 profit. Man, where the heck is that? Here's another one too. Yeah, I mean, look at Avilio there. He did a great job trading. up 354% in the last week. I mean, yes, everyone wants to have nice gains like that, but to be up 354% in your entire account over 1 week, I mean, that means you're making large trades. You're definitely making large trades. I mean, I'm very happy for him. He had an incredible week there. But if you're up 354% on your entire account in 1 week, it's because you're making very large trades. Okay. And like you can see what we do. We have steady, consistent profits. Look at this. Here's the one with Roman. I think the other one's right above it. Look at Roman here. In the past week, he made $106,909 profit there. Here was CoreWeave, here was NVIDIA on that breakout, MicroStrategy. He absolutely nailed. He didn't have a single day of a pullback there. He did not have one single day of a pullback. So I want you guys to understand how important it is there to look and identify those setups right there, like Roman just had, where he made $106,909.04 profit in 1 week. And if you go through this, guys, you can see the people that are having large gains, they're following through with the trade plan. Trade plan is key. It's very important. And if you follow through with the trade plan, you're going to do very well. If you're not following through with the trade plan, things are going to go south for you very quick. You're going to give back those profits. United Healthcare was a perfect example. We capitalized on that. We made a great profit. NVIDIA, we profited from this big climb here. And then some members were trying to force trades here on NVIDIA. I ended up jumping into one as well. And, it's not doing anything yet. I still think NVIDIA is going to get that breakout, but it's not doing anything yet. It's in consolidation. So when you're in that NTZ, it's important for you guys to understand that when you have candles side by side here, you have to sit back and wait for that opportunity. Wait for it to break above resistance. Wait for it to break below support for that entry into a put or an entry into a call once you break out of that resistance. That's what's really important, guys, of the trade plan. Okay, because it's very easy to give back profits after you had an incredibly successful few weeks or a few months. We made massive profits over the past few months here after that market pulled back and we capitalized buying that dip. But it's also very easy to give back those profits if you're not prepared and being disciplined following the trade plan. So I am here to help coach you, and that's my job, and that's what I'm going to do every single day. If I sit back and I'm not trading, or if I'm not on the stream in the afternoon there's a reason for it. There's nothing happening, and I don't want to be on there saying, "Hey, look at this chart; it's looking good there." Because if I say, "Hey, Nvidia is looking like she wants to break out next week," you better believe there's going to be people in the trade room that are going to go buy Nvidia after I say that. So, like for me, when I'm seeing us in that no trade zone of our trade plan, and we're kind of just flat, we're seeing the candles trade side by side there. That's where I'm going to be a little bit more cautious and wait for the opportunity for the proper setups and entries into our trades. So I want you guys to understand that. That is the key to your success right there, is identifying the true breakouts when you have candle above previous candle's body and you're continuing that strong breakout compared to where you're just trading sideways and theta's eating away at that premium for the next week. Do you understand what I mean? When it's trading sideways like that and theta's eating away at that premium, you're not going to profit on those types of trade, guys. That's where premium's going to get eaten away and you're going to lose on that trade. And then guess what? You're going to say, oh man, I got to make another trade. I got to make back that profit I lost on that last trade. Or you're going to say, hey, the last 2 months I've made so much money here. I'm going to make a larger trade to make up for that last loss. It's not going to work. I'm giving you guys the blueprint and the trade plan that works and is going to help you grow your account if you're disciplined enough to follow through with it. If I'm not trading, you know, honestly, you guys shouldn't be trading there as well. Okay. If I'm sitting back for a reason. I like taking advantage of momentum in the markets and when we have catalysts. That's what our trade plan is for, and that's what we identify, and that's what we execute on. We execute on the bomb cycle, the breakout momentum cycle. We execute on the BDM cycle, and we execute on any breaking news that is a catalyst for that stock to propel it higher or lower, and we make money. I mean, you guys saw we made $90,000. $90,000 in the past month. Do you think I want to give that back to the markets? Absolutely not. And once you become a seasoned trader and you realize that you don't have to trade every day, you just have to trade those breakouts, because you can see right there, right? I mean, think about it. This is a small account right here. This right here, take a look at this account. This is my Robinhood account. This is a very small account right here. That's a very small account. I more than doubled that account there in the past month. So guys, what's important here is making the profits when you have the catalyst and when you have that true bomb and BDM cycle, and then not giving back those profits. And then in the main account that I just have shares, we're up big over there too. Well up over, I think, 60,000. But guys, that's the important thing there. Don't give your profits back. When you make money, I mean, think about it honestly. Would you guys be happy if you made $18,000 in a month, every single month consistently? Or are you going to be greedy and say, I'm not happy with 18,000. I need that 75,000 this month? Of course not. You make 18 grand in a month on a small $30,000 account, you're going to be locking that in and you're going to wait for those setups, right? I mean, that's me. That's what I do. I mean, I'm pretty disciplined. I'm pretty straightforward with you guys. When I see that there's no opportunity, I tell you guys, we're trading in NTZ. There's not much action going on today. And if I say that, I'm saying it for a reason, to protect you guys, protect your accounts, protect your profits. I don't want to see you guys forcing trades when the markets aren't doing anything. I continue to have profits and continue to make profits here as we go forward because I'm waiting for the right opportunities. I'm following through with the trade plan. Okay. So I really want you guys to understand that the trade plan is very important. And like I said, if you guys go over to our Discord server in the trade room right there, you'll see right before class tonight, I went and I uploaded some of the top. This one right here is the master trade plan. If you watch this one right here is going to give you the most details that you could ever imagine of our trade plan. I mean, this one right here is more detailed than you'll ever imagine. It's about 36 minutes long, and it's going to tell you exactly when to buy, when to sell, when that NTZ is, and how to go out picking your expiration dates and everything like that. So, you can see this video's got quite a bit of views there. It was from 6 years ago when I made it. This is your blueprint right here. So make sure you follow through with that. It's very important for you guys. Now, if you go down here, like I said, hedging and shifting market conditions, that obviously made sense back in January and February when the markets pulled back. And then you could see right here, finding the right strike price, expiration date, entry and exits. Managing risk when trading options. It's more about position sizing. Here's one about vertical call spreads, one about covered calls, and then here's position sizing and options. I need you guys to watch those videos. If you master those videos, you're going to understand what I'm doing every single day and why I'm continuing to see those profits in our accounts. So it's very important to realize that. Now, the last part of the class tonight, I wanted to go over a few stocks that I identified as potential breakouts. Number one is one that I already told you guys about, UNH. I think this one's prime for buying some shares. You collect a nice dividend on United Healthcare, and the stock looks like it's going to continue up to about that $400 range. So I think we have a lot of potential profits ahead on United Healthcare. So I'm still debating if I'm going to pick up maybe like 500 to 750 share. Well, I wouldn't do 750. I do 100 share lots. That way I could sell covered calls against them like we did with CoreWeave. But I'm thinking about picking up some shares of this, collecting that dividend that's going to be coming out next month, and also looking for that share appreciation up to that $400 per share. I like that one. Ron Paul, David Manasek is one that told me about Kratos Defense. So as you guys know, Trump just announced that he's doing a Golden Dome for the United States. It's something like Israel has. It's a major defense system. We're going to put nuclear weapons in outer space, and we're going to be able to control every single country. If there's anything that's leaving the airspace of Morocco or Russia or any other country, we're going to be able to know that, identify it, and shoot it down immediately. If there's anything that's coming up from a submarine or a Navy ship on our coastlines, the Golden Dome there is going to be able to identify that and shoot it down before it gets anywhere near our airspace or our coastlines. So I made a post about that. David Manisek actually showed me one of these reels about it. It was incredible. But Kratos, if you guys look at Lockheed Martin first off, Lockheed Martin was $4 a share back in 2020. Let me go back here. Not 2020. Was it 20? When the heck was it? Let me see. Maybe it was 2000. Yeah, it was 2000 right here. Look at the stock here when she was down to 12 bucks a share. It was actually got down to about $4 a share. But that's right when it came out. It was a few years. It was about 5 years after the company started and went IPO, right? 5 years after, she started breaking out from $4 a share all the way up to 600. Kratos, KTOS. This is a small, newer defense company that has real weapons, real they have a bunch of different types of weapons. Like as far as drones are concerned, they have specialized drones. They have other weapons and everything like that. But look at this stock here. It just had its IPO back in 2000, and she's starting to get that climb again. I like this. I like the company. With our new Golden Dome, this is a company that could put all the weapons into that Golden Dome. So we're going to have missile defense systems across the United States. They already announced there's going to be some in Texas. There's going to be some in Georgia. There's going to be some in Alaska to monitor Russia's, nuclear capabilities and all their defense systems in case anything comes from Russia. So it's going to be scattered across the whole United States, and each one of those stations are going to need billions of dollars worth of weapons in each of those locations. So they were talking about the entire project being over $2.7 trillion. That $2.7 trillion that the government's going to be spending over the next 10 years is going to go into companies like Kratos, like Lockheed Martin, like Raytheon Technologies, and like Northrop Grumman. So if you take a look at NOC, Northrop Grumman, this is one of them that are going to benefit. Who's going to get the biggest contract? We don't know. But look at Northrop Grumman here when she was just $5 a share. $5 a share to $600 a share recently. Look at Lockheed Martin. Look at Raytheon Technology. So with this new defense system, I think Raytheon Technology is one of them that's going to be getting a large portion of that Golden Dome contract. So I like RTX, and I was telling my brother about that too. I think that's going to continue to rip. I think Raytheon Technologies, I mean, they make missiles for the United States that shoot out of the ocean. They shoot out of silos. They go into outer space. They'll hang out in outer space until they detect a threat, and then they'll shoot it down. We have so many nuclear weapons in outer space right now, and a lot of them are through Raytheon Technologies and Lockheed Martin. So it's important to identify Raytheon as a true breakout stock and something that you might want to hold on to for 2, 3, 4 years or get a leap on. Same thing with Lockheed Martin. But that Kratos, KTOS, I like the looks of that. And I'm glad David brought that to my attention because I'm probably going to be adding some shares of this one here because this will be $100 stock here in the next year or two. I'm pretty certain of that, especially with that big project that we just did with the Golden Dome. So that's a nice one. Now, getting back here, here's one that they said is supposed to have a solid climb here after Trump just made the trade deal with the Middle East, with Qatar, with Saudi Arabia, and all those. So this is Wesco International. This had a lot of pullback there with tariffs, and they're saying that this one here is set and primed for $300 a share. It's one that I've never really heard of or traded before, but it's one that I just added to my watch list and that I want to keep an eye on because if she gets back up to $215, she's at $172 right now. So if we do the math, 215 divide that by 172, I mean that's a share appreciation of 25%. That's 25% share appreciation getting from where she's at right now back up towards that 215 where she was about a month ago. I think this is an excellent opportunity for a leap or to buy some shares, collect that share appreciation, also sell a covered call, and then with the dividend. You have 3 income strategies from this one stock right here on Wesco. So that's the other one. The other one that they said is really going to take off this year is Boston Scientific. It's obviously a medical device company. Boston Scientific has been around. They make a lot of cardiac machines and everything like that. And this stock has been doing nothing but climbing, going from $4 a share all the way up to 106. They're saying this is going to be the next $300 to $400 stock over the next 3 to 4 years here. I like this setup right here. I like Boston Scientific. It does not pay a dividend, but it's definitely one that you want to put on your watch list. The stock is at new all-time highs, and she's going to continue higher. Okay. Next one is APLD. So if you take a look at this one, this is Applied Digital. With all the AI, this is data centers for AI. It's a $6.70 stock right now, and they're saying this is going back up to $12. She gets up to $12. That's about 100% return just on share appreciation alone. I like this one. I think you guys should be watching it. I think this is a good long-term buy and hold. AI is just starting to take off. There's going to be a need for data centers and energy for all this AI. So this is a nice one to look at possibly buying and holding for the long term there. Okay, next one that I really like. I mean, you guys saw Skyjack talking about this one in the trade room today. I brought this one up in class about a week or two ago. Is Ionic. IONQ. I mean, this one right here, this is a quantum computing stock, but they also sell hardware that Amazon uses. So Amazon is a big client of this company right here. I think this one's going to continue to go. They're talking about this one reaching $60 to $70 a share. So obviously, if this gets up to $70 a share, she's at 35 now. That's 100% return. I feel like this is one that I want to pick up 1,000 shares of tomorrow morning on the open and look for that continued breakout over the next few months there. I think we have some nice opportunity on this one. And that about does it there as far as new trade setups are concerned. I mean, we went over all of our normal trade setups that we were seeing in the trade room. I mean, Pfizer's looking fantastic. Pfizer's climbing after hours there, almost closed that highs of the day. We picked up a Pfizer trade. Pfizer pays a massive dividend, and I think Pfizer's getting right back up to at least that 26.50, and that's like another 20% return, just getting back up to that red 50-day simple moving average, or closer up towards that 27.50. I mean, that's incredible return there with collecting that dividend. So keep Pfizer on your watch list there. And like I said, we made that trade on NVO for this week's expiration. All we need is NVO above $70 a share by Friday, and we're gonna have some really nice gains on that trade there. So I'm looking forward to it. We just got that MACD cross, the moving average convergence divergence crossover on Novo Nordisk, and she's climbing and she's looking great, guys. So keep an eye on NVO. With that new management change and the new CEO incoming, I think NVO is due for a reversal here and getting back up towards that 90 to $100 a share. I think you have excellent opportunity picking up shares here and targeting that $100 over the next few months. I think it'll be there by the end of the year, back at about $100 a share. As competition heats up with Eli Lilly and their drugs, their weight loss drugs. So that's what I wanted to go over in tonight's class there. I hope you guys enjoyed it. Like I said, the main thing there is to follow through with that trade plan. When you're in NTZ, sit back, don't give back those profits. Wait for those setups. I have this on a weekly chart. So look for those setups and identify those setups that are in the bomb cycle or that BDM cycle, and that you could take advantage of and make some money as you see it either breaking out or breaking down there. All right. I'm going to shut off and end this recording, and then you guys could stay on, and I'm going to do a Q&A with you guys if you guys have any questions there. All righty, guys. Thanks for coming. I'm going to end this stream now. Guys on Zoom, stay on here. I will do a Q&A and go over anything you guys would like. But as far as the recording here, I'm going to end that now. You guys have a great night. Take care. God bless. And I'll see you on the live stream in the morning. And if you guys want to come join us, go to www.optionstrading.college.